We've seen retail stocks come back to the last few weeks in anticipation the consumer is still going to be strong going into the holiday season. Even some of the most downtrodden, forgotten brands have had a big comeback. Let's talk about it with J. Michael Prince. He's the president and CEO of USPA Global Licensing. And with that, US Polo ASSN, Polo Association. Michael, thanks for being here on the Schwab Network.
Hey, Oliver, thanks for having me today.
Absolutely. So start off from your perspective with your guys' brand and what you see directly. How is it looking for this coming quarter and the next couple months of spending?
Well, you know, we've been watching holiday very closely, as like most retailers around the world have. And what we've seen is aggressive early Black Friday opportunities across retailers from high to low. And so it's going to be an aggressive, competitive season this year. And we're seeing deals coming through e-commerce in the stores. I actually went and hit Aventura Mall in South Florida, which is one of the great malls in the United States. And the Black Friday sales were already starting. And as I mentioned, folks are getting very aggressive with the deals. But I think it'll be a good season. I think you'll have winners and losers.
Yeah, what do you see just kind of generally from the sales strategy? You know, it kind of used to be like a few big hit days around the holiday season. Is that kind of like flattening out now to be like a holiday month? You know, it's not just Black Friday, it doesn't seem like anymore.
You nailed it. Black Friday started 2-3 weeks ago, right? It'll run all the way through the end of the holiday season. Before, you used to have 1 or 2 huge days like a Black Friday, Cyber Monday, deep discounts. People would storm the stores, storm online. And now what's happened is really Black Friday or the holiday aggressive shopping season starts late October, even early November, and lasts all the way through basically Christmas. And then you'll have even deeper discounts over New Year's Eve. But what I've seen this year that's been a little bit more interesting, I've seen deeper discounts earlier, and then I've seen brands, you know, you want to grab your margin dollars as fast as possible right now. You know, we believe great brands like ours, which really works with the working family consumers around the world, are great values for the consumer. And so you've got destinations like Walmart, Costco, Amazon, TJ Maxx. They had a great quarter. We see that being a great opportunity as well, because the consumers, especially kind of lower middle income down, they're strapped, right? Gas prices are high, grocery prices are high, interest rates are high, there's inflation. And so those discretionary dollars are more limited. And so, you know, as a retailer, you want to take advantage of that challenge and move sooner rather than later.
Last report from Walmart that we just got this month, the team in their earnings talked about an outlook that they said included the potential for deflation. It was kind of an interesting message coming from a Walmart, which of course can survive a lot of different economic conditions with the price points. It almost kind of seemed alarming in a way. I mean, do you see something like that? Are we like teetering on an edge?
Well, I think domestically, you know, we're a brand that's in 190 countries worldwide. So as I mentioned earlier, we really service that kind of lower middle income working family demographic all over the world. And, you know, I'll tell you, in certain parts of the world, such as Western Europe, and I'd say even China's been softer this year. I think you're in a mild recession already in certain markets. In the United States, you know, I think Walmart's a long-term winner. They're investing $9 billion in their stores of the future. If they weren't winning, I don't think you'd see that kind of investment from them, and they're a great partner for us as well. But you're definitely seeing some softness with the discretionary spending with that lower middle income working family consumer. And so, you know, they're going to be looking for deals and looking for great price to value propositions as well.
You see a big gap between the price points determining the success of a brand right now. Is it necessarily like the cheaper the better, or do you have to find a sweet spot of being affordable but, you know, also have a recognizable name?
You know, that's a great question. What you see is, you know, luxury started to soften in Q3, late Q3. And so I think even luxury will have a little bit of softness in Q4 around the holidays. And then if you're a great brand, I'll use an example like a Nike or a Lululemon that really offers innovation, specialty type product to the consumer. I think the consumer will make that stretch to buy those items from great brands like that. And then I think when you look at a brand like us, which is a great basic product, a global sport-inspired brand, but a great price to value proposition, I think that's also a great opportunity for the consumer. So I think you've got 2 or 3 different options out there. But, the consumers are going to be looking for deals. And that was obvious to me this weekend when I saw how aggressive some great brands were being online and in store.
The brick and mortar versus online, we've been kind of tracking this slow progression out of the brick and mortar, but it seems like maybe we're at a point where we've reached some equilibrium. We haven't had a lot of big, high-profile closures recently, but what do you see in that regard, Michael?
Oliver, that's a great call out, because for a few years, all we heard about were store closures, bankruptcies, et cetera.
Yeah.
During the pandemic, you saw a huge shift to online purchasing. But what I say at the end of the day, we're tribal in our nature. We want to engage with each other. And I think stores, brick and mortar formats, serve a great place for families, friends to shop and engage together with great brands. And so I see that always being relative to retailers an important part, as well as e-commerce. But one thing we've noticed on e-commerce, you're starting to see mobile purchases get stronger and stronger. So in the past, it was laptops and iPads, but we're seeing more and more orders coming from mobile. It's about 60% in the United States. And when we go to like one of our markets in India, where we're approaching a $500 million footprint, it's 85% mobile. And so I think you're finding, to your point, a nice equilibrium. Wow. But within digital, the shift's going from e-commerce directly from desktops and iPads and laptops to mobile devices.
Hey, Mike, can you give us a quick thought on kind of the style that you see winning out? Some of the things that have become real popular the last couple of years that are commanding leads in the marketplace. I think about athleisure in some way. I kind of think about, I was in the Saks Fifth here in Chicago the other day. There's a lot of, the men's section was just like pure streetwear. It was like, I couldn't find anything in there for me. It was just not even close. The athleisure, I can get on board with the athleisure stuff. Some of the other like hyper streetwear style on the very, very high end to me like boggles my mind.
Yeah, you shop like I do. I love a good pair of denim pants. I love a polo shirt or a nice long sleeve Oxford, roll up the sleeves. But you're right, like streetwear is still very relative. One thing that's balanced out, and you'll remember this, in the pandemic, it's like everyone was buying and wearing athleisure.
Yes.
And as we opened up the workforce back to being in the office and business meetings and business travel, I think we've got a nice balance now between sort of business casual wear, formal wear, and then what I call more of the athleisure streetwear. But athleisure wear still works. It's relative. One thing consumers are looking for, they're looking for uniqueness and innovation, and that's why brands like Hoka and O have kind of come on mainstream and are challenging places like Nike, and with the innovation factor. So I do believe certain brands that focus on innovation, that's something the consumer will pay up for. And especially that young Gen Z consumer, young millennial, they're looking for those types of options. But for guys like me, I like the basics, and I'll always shop the basics, and they'll be there for us.
All right, J. Michael, thanks a lot for the conversation. Have a great holiday.
Well, happy Thanksgiving. I appreciate it.
Likewise. Yeah, let's check back to 2024. J. Michael Prince, President and CEO of USPA Global Licensing.